Hi, everybody, and welcome to Realty Success. We are so excited today. We've got a great guest, and you're going to have a lot of fun with us. My name is Brooke Bryant. I'm one of the hosts of Realty Success. I'm a realtor in the Charlotte, North Carolina area, and I work a lot with investors and home sellers, but love working with first-time home buyers. I have a book you can find on Amazon, The Ultimate Guide for First-Time Home Buyers, and I'll have a link to that at the end of the show. Joining me today is the beautiful Regina Brown. Regina, please say hello to everybody.
Thank you so much for having me today. I am Regina Brown. I'm a luxury realtor here out of San Antonio, Texas. So, looking forward to some great information today. And over to you, Scott.
Well, good morning and hello. We're getting to talk about one of my favorite topics, well, real estate. And how do you win it? Since we both share such a strong passion to help first time buyers succeed, allow me, please. Most of us listening, I'm going to guess, are not yet familiar with a term called trended credit data. Trended credit data allows a mortgage underwriting decision to happen differently. When we make underwriting decisions as an industry, we use credit scores so strongly on how we estimate your ability to repay that loan. You see, a lender has one master question I've discovered. And here's the master question: will you pay me back? I have to ask a whole bunch of other questions to get to the master question. Credit scores were built in the 90s. I thought they were here forever. They're not. And credit scores, there's over 30 different algorithms used in the market space. Real estate uses one specific one. So our credit score that we underwrite to has a different look than the one you most likely get from your credit cards, just a different algorithm. But allow me, the credit score is no longer the only thing that we're going to make credit decisions on. Here in the near future, you may have a 700 plus credit score and get denied a mortgage. The reason for that is that a credit score is easy to manipulate. A credit score is simply a photograph of raw data at the time you ran the report request. I like to think of credit like a river. It's never the same twice. And that's because credit cards are not always reporting information at the exact same time you used your credit card. Maybe you went to lunch today and I ran your report tomorrow. Maybe that lunch was $32 and it was enough to affect your FICO, but yesterday you didn't buy that burrito. So everything we do in life has an effect, and we'll see it in the credit report. And if you pay down credit, once I see it, then I can often improve your credit score. So that's what I mean by credit scores are easy to manipulate when you understand what they're looking at. Trended credit data removes the manipulation. So here's how it does it, and here's what it's doing. It focuses on revolving credit cards, and it wants to know, how do you manage debt, consumer, and your credit cards is going to go back 2 years. 24 months history is what it's looking at. We've not done this before as an industry. We do it now. We're looking to see, what was your credit limit? What was your credit balance? What was your minimum payment required? And what payment did you make? And so, how you manage your revolving credit will, in the future, very, very, very soon, determine whether or not you get a Fannie Mae, Freddie Mac, or a mortgage, because we're going to use trended credit to see if you're a credit abuser, if you're a credit user, or a low credit user. We're going to get a better understanding of your credit past by seeing how you manage credit debt. So, my recommendation for our listeners today is this: you will be seen as a golden credit angel when you're the creditor or the user of credit making more than the minimum. The people that are going to be most challenged in the future are those that make minimum payments that carry high debt. You are a completely different risk, whoever you are listening to us, than the person that pays more than that they're requested and they don't carry high debt. And if there's somebody that have high debt, but they're making larger payments, that's a different risk person that had low debt, but is climbing into high debt and not making those payments. So my recommendation for our listeners is to pay $10 more than the minimum. It's not a minimum amount to pay more, just pay more. They're looking, and the new algorithms are looking at that. That's called trended credit data. And most of us don't even know it exists. And we're using it right now in underwriting mortgage risk. So please, listeners, pay more than your minimums.
What a great takeaway.
Thank you so much.
No, you're super welcome.
There are people out there who will help you find that yes. And one of those people is Scott Griffin. Scott, tell everybody where they can find you.
I love the internet. So please, I'm a national television host on Bloomberg Television as well. I'm also on CNBC and Fox Business. The show's called Financing the American Dream. And it's a really fun place to explore real estate lifestyles and communities throughout America. So you'll find me on television. You'll find me on Apple, Roku, streaming on your local streams. Gosh, 818-20 Scott. What a fun phone number. Who gets 818-20 Scott? Well, I did back in 1997. So 818-20 Scott. We'll talk directly. And scottgriffin.com is another fun way to find hello. And thank you again for inviting me today. I love what you're up to. I love what you inspire and invite. And none of this would have been possible today without your inspiration. Thank you.
Well, thank you. And to the lovely Regina.
Thank you so much, Brooke and Scott. Again, Regina Brown here out of San Antonio, Texas. You can find me on all of the social medias. And you're ever looking to buy or sell here in San Antonio, I would love to help you out.